Hello and welcome, as today's date is that of Monday, 23rd of September 2019. My name is Derek. All bets, trades, and of the like within each his own risk and their own reward. This is a precious metals videos. We'll look at silver. Look at a lot. There's a lot of things to go over. I won't spend too much time with gold and a little bit of time amongst the gold to silver ratio. All right then. So as it went, which was the entirety of last week, price action started it off by gapping higher, and then it proceeded to trade in a range. And well, that was that. That was that. As we had the sideways consolidation that occurred in the market, and the keyword is had as past tense. Is when the breakout occurred earlier with this obvious time frame here, which happened at 2100 hours last night, or shortly after the market opened. That's also 9 p.m. hour, 9 to 10 o'clock. New York City time. And within this sideways range, there was even Fed stuff. The Fed came in, they talked about interest rates. I didn't even check to see what they did, nor do I even care myself. If you do care, you already know, obviously, because that was way back when. Okay. So now that it's over, it has to break it to one side or another, and that one side obviously to the upside. And what has it happened, or what is it doing since then? Well, after the move, it comes up to this Fibonacci line that I have written in, and well, did it resist it? Not on the hour time frame. No, it did not. Did it support it on the 1 hour time frame? Almost certainly it did. Not only did it, but it did extensively, because it did so for the 23 stamp. It did it on the 0 stamp. It did it on the 1 hour stamp. It did it on the 2 hour stamp. And it also finally, it finished it on the 3 hour stamp. And that status was done with the breakout at 4 o'clock this morning. And what followed 4 o'clock? Well, what followed was three periods thus after it, 5, 6, 7 o'clock. Or this happened at what time? This happened at 3 o'clock. What happened was one correctionary move down, then three periods doing this after. So a 4 period set where the pattern was basically really ascending triangle, as with a straight line of resistance really being established at about 1842. And then just having this nice little uptrend that is still in play right now. Now this period is attempting to finish even that, as it's managed to break out above this short-term level of previous resistance. And when we take a look at this, say, we'll go 15. I haven't looked at the 15. I didn't plan on doing this. In preparation for the video, that is, when I say that. And it's showing at 9 o'clock right now. It's 9:34. As the U.S. markets are now opening, that this move is continuing on. So what does this all mean now on the more longer-term time frames? Well, let's just take a look at this on the daily. And within it, we can see for the day, it's up 2.88% right now. Still relatively early, as stated, 9:34. A lot of things can still happen. And all the three main things, really not much. There's nothing else it really can do, which is go up, go down, or really go sideways. But that just means you could end up having days where this is up. Well, right now it's 50 cents. We could have it over a $1 day as a possibility. And even $2 or whatever, which would be like 10+%, is is live. That's like where I like to say live, as in it's not far fetched based on norm, or it's much better than probability odds would, much better than normal probability odds that would normally suffice. Price action is getting above the 18 average of highs, which is what I have been terming for the last few months, is a name I like, and I started exitation of that band. And doing that, that's one of the most bullish things that I like to look for, is situations as it's leaving it. And well, right now, of course, that's what I'm seeing. Now, as far as these lines are concerned, Fibonacci, well, we'll see how well they end up playing out. But they all become very short term at this stage. You had 18 and 76, 1909, 1930. And as I look at these and I'm thinking, okay, this is an interesting number here, because to me, if it's able to really get above this number, this is where we're having the true exitation. And as far as wild moves is concerned, and putting this in a good bullish statement, that's the number that it is. And these are really for really short-term day trading. Really nothing more at all there after that. And in the breaking of this resistance, well, when you're in this bull market like this, then you really got to expect, okay, well, this is again wild card again for how good this bull market, or live, I should be thinking again, but wild card for how good of this breakout could end up being like a nice 7% move. It could be a 70% move, and even better than 2x. You could see 50, 60 follow from it. It's unlikely, but it becomes possible on the situations of a break of that resistance. So I wouldn't want to guess that, okay, how big and how far are we going to go, but oh, we're going to have a good leg higher is what I would be saying on that spot. And then viewing the weekly term time frame, price action getting out above the 18, or the exitation here occurred on the July 15th week. And since then, it has been an amazing grind to the upside with this move in here. So that's a fantastic, fantastic run. The price action in this, I say that a lot, but the movement in here comes down near, but not quite to the 18 average of highs. So that's one of the spots where I'm like, well, technically, no, it didn't have a full correctionary phase. But when you see the price go from like 19 and 3/4 down to 17.50 like this, a very big line coming down with a noticeable red candle, then followed by even a more noticeable red candle. Yeah, it's a correctionary move, but it also goes to show you that it had a move of that of that type of sense, or that it had that move, and it still, despite that big the double move going down, it did not even get to this 18. And now in this nice volatile session, we see, I don't, and it's not excitation, but it kind of is. It's just leaving into this area where, of course, the daily time frame is showing, okay, yeah, if we get above in here, the 19 lows, get above 19, then we could be talking about breaking these highs. And this high is levels not seen since, well, back in here, I got February 2017. It was before then. I got a line in here. We'll go over that in a bit. But this is levels not seen since September of 2016. That's now 3 years because we're in September of 2019. And then this high in here was June of 2016, and that was levels not seen before since 2014. So we're very close to highs, and even that, and we're only going to be at this for a brief period of time because once we get above this high, then we got this high from July of 2014. Then we got this high from February of 2014, which isn't that much higher. Not that much higher after that is the high from October of 2013. A little bit higher, but really not much higher after that is August of 2013, and that's around 25. And then above that, we're talking about 2013 and then all of that. So to look at all those other time frames, I'm going to do so on the more longer term. And in here, we can say we're stuck in these two lines, but technically we are stuck in sideways movement because as we've had this downtrend, 18 average in the total declining fashion, and since this bottom, it's went above the 18, but it hasn't broken a higher since. That's going back to the correction move. Then below it just once, and it matched, technically piercing above, but no, it's a matching high in my book. But that's all it's done. And now it's getting above it. We're having that excitation again and a sideways move. And when you have excitation here, okay, well, we should get up to this high. And now what? Question mark is the type of thing I like to state in here because in this situation, I don't see no technical analysis just by this alone that this is going to get above. Rather, that it's going to need to play itself out some more because now you got a both bullish and a bearish situation in which price action can go down. Sorry, but I was just trying to do in here is I need to push this and then I can go like that. That's what I was trying to do. And I got all these things. This is to draw a line. I added this as a rectangle, which was the start of it. And this is the drawing tool that I use just in the background, I guess, or where you can't see it normally. But whereas both bullish and bearish is for spots where on a bullish level, something like this is to happen. Okay, well, that was the intended target of leaving the 18 in here where you would go to. So therefore, having a spot where you maybe go up and then down, and in this you'd end up meeting up with the 18, all that coming back to where I came from. I always talk about it in the past. And if a situation like this to occur, that's a pretty darn near very bullish setup, and that's oftentimes what does transpire in those situations. So that's why okay, I'm trying to delete this. Why isn't it not working? There we go. Was it not working? But that's one of the situations. But when you get up here, if this doesn't resist, or if it resists through time and just maybe a congest at there for a while. Because another thing here, when we came up to this in 2016, well, we only spent 3 periods there. That's an upgrade situation. Maybe now we'll chop around with this, maybe for 8 periods, maybe spend like 3/4 of a year or something, with in a range between 17 and 3/4 and 21, 22. That's another possibility as well. But you also got the situation where it just doesn't even break it, or it just doesn't do any of that. It just breaks it. And next, if you start to see, oh, 22, 23, okay, now we're majorly in starting parabolic moves, just starting it only. Or the hog wild situations, if we ever get there. We haven't been close to anything like that, but that would be the earliest stages for that beginning where, okay, we can start to see $3, $4, $5 days, or more importantly, higher percentage moves and just a lot more wild action at that. I got to think on the break and above here that the fast move would be in this range. So conservative, we're looking at 26, 27, 27 even conservative, high 26s. And then aggressive in this range would be to 34. And then normal would be like just in the middle, like 30. So that would be the range that I think that the price would go to. Looking at this and trying to figure out those Fibonacci lines I got in there, and they all make sense. Quarterly chart. As you can see, there's a little bit of congestion. 18. This is not excitation. This is band flattening out. Really, done. That's done. It band's flat now. For me to see a true, real move like this thing is going to get going, it really does need to get above this line because we did just stall in here. This thing is only going to get flat. I need to see a clear break above the 18 for what I would call stage number 2, established resistance. Stage 1, of course, flattening out just happened. And within these lines, Fibonacci from these lows back in here, and actually it's not from these lows, it's actually from the night, actually it is from those lows, yeah, they are from those lows. From these lows and these highs, this is 61.8% down, this is 38.2% down, this is 23.6% down. So in a spot where you retrace 60 to this level, if you come back to previous high, and then you hold above this, I mean, even piercing, but if you hold this level, and it pierced largely above it, and then you end up coming back up and you're starting to get to the upper end of previous range, twice hit previous, probability odds are extreme that that thing could go for major moves. And it's like high wild alert. We're talking red alert, not yellow alert, not amber. And not only red, but screaming like large, like level of red. So the intensity level of it is large as well, which is what can make things get really wild. Okay, so next we're gonna go to gold, but before we do that, let's just go quickly back to the short term with silver. And as we see here with all these lines and getting above it, 1850. Let's just quick look at 15. Oh, nice little set. Oh, that is just beautiful. I mean, I know this is well past when you're watching this, but hey, take a look at how this is done. This is the 9:45 Eastern stamp, because this looks like a very bullish setup for the day going forward. But the reason why I wanted to go the short term is because of the daily chart in here, where we see all of these lines in here, how it's getting above it. The 18 is nicely as it is, and within gold, it's up $1.62, almost a little more than 1/10 of 1%. When silver's up near 3. Okay, we know what the ratio now is going to be like. That's going to be interesting. If you haven't seen it, it's going to be a nice red candle. When silver's up like 3% and gold's barely better than break even, well, then the ratio's got better than a 2% move. But before we get there, we got this Fibonacci line in at 15 and 22, we'll call it, for the gold price. We got the price action coming back down, but really not that aggressively, barely going below the 18 average, and having majorly successful support at about 1485. It's just hanging in there within the 18 average of high, so it hasn't done any exiting of it. This barely newing declining average has just now flattened, which isn't a positive momentum for the bears when that's all you can do. But hey, maybe they can do more, and good try, we'll say, because obviously when you look at the daily chart and you look back at days and years and weeks, there's going to be several times it just keeps going above and below, because that's what price does. But this line is a very interesting one, because at the 1522, And I kind of want the monthly time frame for this. There we go. This is how the Fibonacci from this is 61.8%, 38.2% from this high to this low. And it had a lot of resisting before and after at this level. And before and after meaning, well, the Fibonacci was established from this low. So you didn't know what these lines were in February 2015. You knew what those lines were in February 2016, though, and they don't change until either this high gets broken or this low gets broken. And where we are now, we're in the middle. Well, barely above the middle, but practically at it. It ain't. It's there until for a while. But that while could be very interesting because just as I was mentioning with silver having possible big moves, the exact same situation is in play here. After having that established break, what it's done after this, you have the pause month, big move. And now we're on day number 23. It's kind of another pause month from this move here. This is just confirming, this is just doing a lot of confirming that this thing is ready to go. That's all I'm really saying. That's a lot when I say all, but it's just saying, okay, first you say the statement, like the screaming on excitation, we're going to do this. Okay, go ahead, do it. And now they're screaming out, okay, yeah, we're not saying that. It's just confirming what they're saying, that's the case. Oh, it looks legit. It looks almost like Daniel Jones like. And who's Daniel Jones? He's a rookie quarterback of the New York Football Giants, who I stated last week. Probably would have a really good game. One of the best games I've watched in a long time yesterday. Just a great breakout of a career. Just a great move. Out of nowhere, but you see it coming in before when you research it, because I kind of researched Daniel Jones, and I was like, wow, this guy's going to be, he's the next Peyton Manning, although he can run. That's even better. And that running won him the game yesterday as a 6-point underdog, which got me got a nice little payout on it. But anyways, not big, but something. The whole point of this is getting it above this. You got a little bit of a short-term resistance here at close to 17, probably at 17, but move to 19 and breaking above after that is not that, wouldn't be that big of a surprise. And we quickly look at gold and silver against the Canadian dollar before we go to the ratio. With the gold, and obviously we're on gold before us, so I'm just going to stick with that again. But it was in this big range, and well, it's just recently broke out of it, and well, it's the early stages of it. Good luck, gold. And when we take a look at the silver chart, I don't know if these are Fibonacci. I think they might be. They look like they'd be the area. It's definitely trapping this range in here. And that's what silver's at the upper end in there at the 26.5 level. Getting above here, you'd think at least to about 35. Should be your next significant target, like halfway there, up to the previous high of about near 50. In Canada, it was like 48 something, I think. 47. We got 40. Well, it says 47, but I thought it was 48 something. Although maybe it was, because that back in here, that's when the U.S. dollar and Canadian dollar was Canadian dollar was microscopically worth more, which was very rare. Now it's at a more normal, like 33 or something percent, 32, 33, 34% U.S. more strong than the Canadian. Not going to show that chart because now we're going to show the ratio of gold and silver. It's at 82, and I have a line at 85. So, well, if you've been following them, you're going to know, probably not, but you'll see in a bit what the reference to. We can see it was resisted in this area, which is actually really big. And it then pierced below it several times, definitely not at 85, more at 84 and 2/3. And even, again, about 84 and 1/3. Support, where was it established? It was established major at 83, 86, with a small amount at 83.75. And the major hold, the bottom level was 83.27, and there was no support there. I'll show you an example soon of what it looks like when you don't support a level and what happens if you resist it, because that'll be a little longer of a time frame. But a consensus large move down. Market like this, if you're ever trying to buy and sell something, this is like where I can never sell. I mean, it's already down way so much. And yeah, you got the risk. You could have a red candle 4 times bigger than this, none the next upcoming. I know that can happen, or it's more live to happen. But what's more live to happen is this thing stops, and will through price and or time will catch up with the 18. And these price corrections when this happens can be very violent and wild as well. When you have these type of, whether you want to call it capitulation or whatever term you want to use, majorly falling, breaking below like this, a crash term, And then when you do get those rallies, you could be like, oh, it goes up to like 83 in here, which would be a move of like near 1%, and that's big on this. Okay, well, that's barely much at all. We'll see how you can handle that because I've seen so many times a big drop, green candle goes up, and then it drops further after that. But at this stage here, it's obviously in a major bear market move, at least from that point. And now we can see within this 85, basically in here, that didn't support it. Had a nice move down. And then we resist it, and well, we're back at this level of previous support now. So there's another reason in there when you look at the hour chart where, like, yeah, I don't think I'd want to quote unquote sell here because there's a high probability that we find support here. And that means we rally at least to where we came from. Conservative is at 83.26 into like 84. Or we just congest, go through time. We could resist it. And resisting it would be like something like this. Any of that type of term. Or even like I say, maybe you have 4 periods in a row where it resists it and then it goes down, something like that. And if you don't do any of that type of stuff, well, next major support is this previous level. Wouldn't take long to get there. And I don't know how well it would hold after that daily chart. 8 days down, its consolidation move thereafter within the 18. Exitation of the 18 at August 26th. And that a monstrous move down. Another big one. I think it's like you asked to say what was better, this move here, this move there. I'm going to have to say this one was more impressive. But they were both impressive. And then this correction was more impressive maybe as well. But look at the size of this move, how the candles have been moving in here compared to here. It's now attempting exitation of the 18 average after what was a failed breakout in here. Afterwards, we were able to get above the 18 highs, and I call it a failed breakout because it gets above, and then you have the move quickly thereafter on the red candle that gets back. Okay, that's fine. And then you hold for 2 periods the 18 average of highs. So you attempted to get out, you're correcting that move. Now you want to lift off, get to this high, break it. When you break to that high, you can talk about the next level, which would be, of course, then would have been 87, 88. But it didn't do that. Now it comes down with a big pierce below the 18 average of lows, and that's just very weak. And like I stated before, when these things go wild, having a quick move down to these types of levels could most certainly be something that could be in store for it. And the next key level I would think is a pierce below 76.89. Thank you for tuning in and have yourself a great day. Bye-bye.